Hey guys, this is Mr. Roxy coming at you live from Palm Beach in Florida. It is Tuesday. It is December the 13th. One of my Twitter buddies challenged me about making a video about some high dividend paying stocks that passed the Rudy sniff test. Those were his words, not mine. It was Girzor, but I think he deleted the tweet because I couldn't find it. Otherwise, I would share it with you. But what I thought to do in the context of sharing with you some dividend stocks. Once again, I can only pick 5 because my software technology only allows me to put 5 stocks on one screen at one time, which is okay. 5 is probably enough, right? If you want more, I can always do a second video. But what I want to do is talk a little bit about my highest dividend paying stocks. And many people have said before, sometimes a little bit snarky, and sometimes just for fun, they say like, whoa, Mr. Oxy really loves dividends. Hey, guess what? I do. So there are a few reasons why I do that. Firstly, dividends create a hedge. And when the stock market goes down and you still receive a high dividend, then you at least have a little bit of cover for when there's a huge decline. Petrobras is a great example, right? So even though Petrobras has pretty much tanked from $15, $16 a share down to like $10, it's paying a dividend that is ridiculous. It's a $10 share that pays a $6 dividend. And they're paying the next dividend in 2 tranches, one at the end of December, one in January. So that's one reason, right? It creates a bit of a hedge. The other reason why I do this is because some of these stocks are foundational to my portfolio, because the simple math, as I've explained many times before, is that if you can grow your portfolio at 15% per year, don't be greedy. If you can grow at 15% per year, you can actually double your portfolio value every 5 years. That's just math. Right? It's not about the stocks. So if you think about it carefully, it doesn't matter what the amount is that you have invested. Let's say it's $10,000. After 5 years, you'd have 20, and then you'd have 40, and then you'd have 80, and then you'd have 160, and then you'd have 320, whatever. So if you're young and you've managed to build a little investment portfolio that's worth, $10, $20, $30,000, congratulations and all strength to you. But think carefully of how this can double and compound by earning also high dividends and reinvesting those dividends instead of withdrawing them, right? Because that's how you get the sort of compounding on steroids. And quite literally, I mean, like using that same example, if you're like 20 years old, right? And you go 25, 30, 35, 40, 45, 50, right? That's 6 times it can double. So if you can invest and build an investment portfolio of like, let's say $20,000, and you're starting with 20, which is going to go to 40, 80, 160, 320, 640, 1,080,000 on that 6th one, right? That's how you can compound and grow your portfolio. And that's one of the reasons why I like dividend stocks. The other thing I do is I hold these dividend stocks as foundational to my portfolio, and I just keep them. Sometimes when they pull back sharply, like in the case of, let's say, Petrobras or something like that, I might even add more. But most of the time, I just keep them. So there are some high-paying dividend stocks that I've had in my portfolio for many years, like Enbridge and Pembina Pipelines. These are Canadian stocks. Anyway, they've been in my portfolio for a long time. Even financials. One of my largest positions is TD Bank. TD pays a dividend of about 4.5%. It's been in my portfolio for, I think it's probably the stock I've had the longest of any stock in my portfolio. So there's a few reasons why I like dividends. The other reason, if I can sort of paraphrase Kevin O'Leary, he once said, all you want to do is wake up tomorrow morning a little bit richer than what you were the day before. Dividends help you to get there and help you to compound your stock. So let's take a look here at 5 of the stocks that I've picked. I'm long on all of these, and you might see a new one because I have not covered this before in terms of my personal holdings. Devon Energy, yes, I actually opened a position in Devon Energy, and it's now one of my longs. So here's my top 5, and forgive me if I'm being US specific. In the first place, the majority of the viewers on our channel are from the United States, and obviously it's English speaking in addition to that, which kind of prevents us from just getting a nice big global audience. But in addition to that, I just mentioned 3 stocks: TD Bank, Enbridge Energy, and Pembina Pipelines, which are Canadian stocks. So I hold international stocks too. But these are my sort of top 5 dividend-paying stocks that I hold in my US portfolio, even though one of them is in Brazil. So where are these companies and what do they do? Icahn Enterprises is a conglomerate Icahn is almost like an ETF, an exchange traded fund that pays a very, very, very juicy dividend of over 15%. AllianceBernstein is a financial holding company. This is the one that's looking the worst on my portfolio. Hey, you know what? I've been to many, many rodeos before. Very frequently, my worst performing stock in 1 year is my best performing stock in the next year, unless there's something fundamentally wrong with the company. There is not something that's fundamentally wrong with AllianceBernstein right now. The company has hardly any debt. And even though its assets under management have decreased and it's pulled back sharply because of the recessionary climate that we're in, AllianceBernstein is, for me, a hold. It's a long, and I've actually added to my position a few times even this past year. Energy Transfer, of course, I've been in now for about 2 years. My introduction to Energy Transfer came from Bulldog's number one. It's an oil, gas, and production pipeline company. It's a master limited partnership, so you need to be aware of that. So you need to think where you would want to hold this particular investment. Perhaps you don't want it in a retirement deferred account. You want it into a regular trading account because your earnings from that master limited partnership, the dividend earnings, are going to be taxed when they're paid out, usually, depending on your jurisdiction and your tax jurisdiction, and every one of them is different. Petrobras, a mega dividend paying stock, emerging markets integrated, massive turmoil in Brazil right now, political reasons and all kinds of other reasons. Petrobras might have its fourth CEO for 2022. We don't know. But anyway, it is so cheap. If you have the sort of guts to hold on to this one, you might do well. But who knows, right? Who knows where it's going? That's also one of the reasons why it's critical not to put all your eggs in one basket. Devon Energy is currently one of the best energy stocks you could probably want to buy in the US market. I'm not overly confident that $60 for Devon Energy is a really, really great price. I would have liked to have bought it at $50, but hey, I'll take 60. And it's a beautiful stock. It's a well-managed company. It's doing very, very well. For the technical guys, once again, the 20-day raw stochastic, we don't want to see it over 80 because that means it has been overbought. Ideally, we want to see it below 20. So here you have a couple of pickups. You have Icahn Enterprises and Devon Energy both below 20, and PBR, so Petrobras, is around 20. So those three, based on a stochastic, the 20-day raw stochastic score, are buys. AllianceBernstein and Energy Transfer perhaps slightly less so. What do the schmanalysts say? So today's opinion, 40% of them say sell Icahn, 40% say sell AllianceBernstein, 56% say buy Energy Transfer, 100% say sell Petrobras, and 24% say sell Devon. So when you look at this row, just this one particular row over here, I would say you can nibble on Icahn, you can nibble on AllianceBernstein, you can nibble on Energy Transfer. I disagree with the 100% sell. There's no particular reason for me to take a loss on Petrobras when it's trading at $10 per share. And in the meantime, I'm still socking away those dividends, and the next two payments are coming this month and next. And Devon is a buy, not a sell. So the analysts can say what the schmanalysts want to say, and that's my opinion. And of course, you need to do your own due diligence to decide whether you want to be in the stock or not. If I look at the performance over the past 6 months or so, relatively flat for the first three on the sort of left side, if I can put it that way. Poor performance by Petrobras over the past 6 months. It's down 20%. Of course, during the past 6 months, you've received dividend payments several times, which effectively might leave you flat in terms of your position. And Devon Energy has pulled back 10%. And one of the reasons why I bought it is because it has pulled back about 10% or more. How about the market cap? So here we're comparing annual sales. This is $11 billion, and this is a $17 billion market cap. So this is a $17 billion company that's generating $11 billion per year in sales. So these are the two lines or two rows that I'm comparing here. Energy Transfer, as I mentioned in a previous video, is a huge outlier. This is a company that generates $67 billion in sales, and it only has a $36 billion market cap. So the sales way outperform the market cap or the value of the company. So Energy Transfer, Bulldogs, remains a buy, right? So, but you guys can let me know in the comments. So Petrobras, an $84 billion sales company with a market cap of only $67 billion. Devon, a little bit more realistic, a $12 billion sales company with a market cap of about $40 billion. The PE ratio is down below, so Icahn didn't turn a profit, so they sit on a big fat duck. And AllianceBernstein is cheap with the price earnings ratio of 11. Currently, the average S&P 500 PE is around 14. So if you can buy it below 14, at least you're buying sort of, generally speaking, slightly below the kind of market average price earnings ratio. So you can see, basically just looking at the PE ratios here, they're all buys. The cheapest one of the lot is Petrobras by far, but also the most dangerous one of the lot is Petrobras by far because of all the political turmoil. Devon is a sweet buy at PE of 7.42. If you held most of these, you probably would have done okay. And the reason why I put it that way is because even though stocks like Icahn, for example, is 1% for the year, it pays a dividend of over 15, which means if you're up 1% plus you socked away the dividend and reinvested it, of 15%, you got 15 plus 1 is 16%. So you're doing better than 15% per year. And if you can generate 15% per year, you can double your investment every 5 years. That is just math. If you owned Devon Energy, or if you owned Energy Transfer over the past year, this is a 1-year graph, you have done really, really well, and you probably should be very happy. If you're not happy, then there's something wrong with you. So for me, I was long Energy Transfer, and now I am long Energy Transfer and Devon Energy as well. So these are two top performers here on the right-hand side. Now, the inverse of that is true if you look at the performance of Petrobras. Now, of course, Petrobras is down 6% over 1 year, but it pays a dividend of, it's so ridiculous. At one stage, it was over, I think today, actually, it's about, with the stock at $10, the dividend is about 64%. I'm sure it's going to get cut. But even if they cut it in half, it's 32%. So I'll take it. AllianceBernstein is my worst performer over the past year. I'm not too concerned about AllianceBernstein. The company is great. It's a financial services company. It has no debt. It's profitable. In fact, it's one of the most profitable financial services companies on the planet in terms of publicly traded companies. So I'm not too concerned about where the stock is trading right now. I am socking away this 9% dividend yield that AllianceBernstein is paying me on a quarterly basis. And obviously that kind of gives me a bit of a hedge, as I mentioned earlier. So even though AllianceBernstein is down 16% for the past year, I'm only down about 6% or so. The entire market is down about 25, 30%, depending on which indices you are studying. So, hey, I'll take it. It's okay. Let's take a quick look at the snapshot here. You can buy Icahn at $50. It's a buy. It's a $17 billion company, so it's mid-cap. It doesn't have a PE ratio because it ran at a loss. Here's this huge dividend I was talking about. It pays $8 on an annualized basis per share, which is yielding almost 16% per share. Held by institutions, almost 87%, right? So institutions love it. In terms of my personal holdings on Icahn right now, I'm an institutional holder as well. So it's kind of like, it's one of those foundational stocks sitting just left of center on the 52-week range, $50. The 52-week range between 47 and 55 a couple of years ago. So Icahn was trading at $69. So who knows? Maybe we'll get there again soon. I don't know. How about AllianceBernstein? You can buy AllianceBernstein for $40. It's a $4 billion company, so it's a small cap value stock. Its earnings per share is positive. It's got a PE ratio of only 11.5. It's probably one of the nicest pickups in terms of a financial stock right now if you want to get into any financial stocks. And one of the reasons why you might want to consider AllianceBernstein in your portfolio is because it pays this dividend of $4.43, which currently is yielding 11.4% based on stock price of $39, sitting just left of center on the 52-week range, and not too heavily held by institutions, which is always interesting when you look at a stock like this. Energy Transfer is a $12 stock. It probably should be an $18 stock, but it's trading at $12. This one is a mid-cap value. It's a $36 billion market cap, positive earnings, PE ratio of only 8.7. It's paying a dividend of $1.06 per share, which is yielding 9% currently, sitting just to the right side of its, or let's say in between the mid-range of its 52-week high and the high itself, about $12. So we're getting close to that 52-week high of around $12.95. But I think it has legs. We'll have to see what happens with Energy Transfer on a go-forward basis. But in the meantime, we can bank or take the $1.06 per share to the bank, which is currently yielding 9%. It's almost 40% held by institutions. So institutions quite like this one. How about Petrobras? It's a $10 stock. This should not be a $10 stock. But hey, you know what? If you have the guts, you can hold or you can buy Petrobras. I'm long Petrobras. It's my fifth largest energy position. The market cap about 66. It's very, very profitable. A PE ratio of only 2. That is ridiculous. The current dividend is $6.46 on an annualized basis. With a stock price of $10, that yields 62%. That is crazy. That shouldn't be the case. It's trading at a 52-week low. I like to nibble on stocks when they're at the 52-week low. But remember, we never jump in boots and all, right? Even if you decide that you actually want to take a little bit of a gamble and take a flyer with Petrobras, buy a little bit. You know, if it pulls back more to like $9.50 or whatever, you can always buy a little bit more. And if it suddenly spikes and it goes to $12, $15, then, hey, you know what? Then you already own it. So then you're not too unhappy about that. 22% held by institutions, not a lot. So Petrobras is an interesting one, but man, this is volatile and very, very high risk. But usually, as they say in the classics, high risk, high reward, right? Last one, Devon Energy. Currently, you can buy it for $62. Now, if I was opening a new position in Devon Energy, I probably would have wanted to buy it for below $60. But hey, you can't predict and you can't call your stock price. You got to just play it as play the hand you dealt, right? Market cap of $40 billion. So it's a large cap blended stock. It's positive earnings. It's got a PE ratio of only 6. It's super cheap. Pays a dividend of $5.17, which at the current stock price is yielding 8.5%, sitting sort of in the middle of its 52-week range. And it's 76% owned by institutions. So institutions really, really like Devon Energy. And by the way, so do I. So that's kind of a quick wrap on high dividend paying stocks. So once again, it's just 5 of them, right? You don't need to buy 5 of them. You don't need to buy 3 of them. You can buy 1 or 2. Or you can even buy 10 of them, you know. So what you want to do is have a bit of diversification, because even the diversification creates a bit of a hedge during market turmoil. You know, we've seen over the past couple of years, if I go back 2 years, so all the way back to the pandemic of 2020, when the market recovered, the highest performing 2 sectors were the energy sector and the financial sector. And most of my holdings were, and still are, in the energy sector and the financial sector. So I did extraordinarily well in 2020. I did less well in 2021, but it was still very good. Not as good as 2020 after that sort of March, April, May pandemic recovery. 2021 was a good year. 2022 has been a bad year for almost everybody, unless you were in energy, because the energy sector, even though it's pulled back sharply, is still the top performing sector sort of year over year. So if you're in energy, you're probably okay. It's the other sectors. So if you're in consumer goods or cyclicals or financials or housing or technology stocks, man, then you got whacked. But at least if you had some high-paying dividend stocks, you had a bit of a hedge. If you have some good, solid foundational stocks that don't carry too much debt, companies that can relatively easily repay their debt, and at the same time have operating income that far exceeds their debt burden in terms of interest payments and stuff like that, you're okay, generally speaking, right? So there's no harm in holding a couple of these high-paying dividend stocks in addition to your growth stocks. If the growth stocks falter and they pull back sharply and they don't perform as well as what you had hoped they'd perform, at least you got your dividend stocks paying your dividend on a quarterly basis, and you're kind of okay. So guys, that's a wrap. Let me know what you think in the comments. I look forward to interacting with you. Take care and talk to you soon. Bye.